Maker Spin Master is the company behind Paw Patrol and dozens of other toy and entertainment brands. It reported fourth quarter results that missed expectations. We are joined by Kylie Cohu, consumer equity research analyst at Jefferies. Kylie, thanks very much for coming on the show. Before we get going, Spin Master is a bit confusing in a way. We know they make physical toys. They make the Melissa and Doug toys, the wooden ones. They make all kinds of electronic toys, but so they're digital, they're entertainment, so they're kind of an empire.
That is a good way of putting it, yes. And I think that's sometimes what adds a little bit of confusion when looking at these numbers, right? So you can look at one number on the top line and say, oh, they missed, or even for EBITDA. But really, you have to look at all kind of three segments separately and kind of see the various moving parts there.
And so tell us about the latest quarter. Obviously, investors not delighted. Where do you think the disappointment is stemming from?
Yeah, I will say this is the fourth quarter in a row that Spin Master has missed on adjusted EBITDA. So overall, just that momentum kind of heading in does give some investors a little bit of pause. This quarter specifically was challenging because all three segments did actually miss on the top line just slightly, but really the EBITDA miss was driven by the entertainment segment and the digital segment. And what they actually announced on the call is that on the digital segment, they will be winding down one of the games that they'd previously been investing in.
So what has been the problem? Paw Patrol is part of the culture. Obviously, millions of kids love it. But have they not just had hits lately?
That is a part of it. So there is kind of a seasonality to it. So last year, Paw Patrol demand was at like almost an all-time high with the release of the second movie. What we're seeing this year is having lapped that and not having a movie in conjunction with it, there does seem to add a little bit of noise, we'll say, to the print. And also you're just seeing, really strong competition from other players as well.
The Melissa and Doug acquisition was huge. And of course, they're more traditional toys like puzzles and I'm not sure if they make yo-yos, but that kind of thing, actual physical toys in the physical universe. I know Jefferies was an advisor on that deal. Has the Melissa and Doug acquisition worked out?
The Melissa and Doug acquisition has definitely caused some investors to pause, right? So I think one of the things that the street misunderstood was really the seasonality of the business. So when they came out and missed numbers in Q1, people were like, is this working? When you see them, though, coming in at the high end of their guidance and growing nicely and being ultimately EBITDA accretive in Q4, you can't say that it's not working. It's definitely, going to be one of their biggest growth drivers moving ahead. But there definitely has been probably a little bit of noise with the seasonality around it.
Now, you say they have a release slate ahead. I presume does that mean movies or toys?
Yeah, so a mixture of both, but primarily referring to the toys, or the movies there, excuse me. Mm-hmm. So they have toys related to the new Superman movie coming out, the How to Train Your Dragon live action, as well as Gabby's Dollhouse. We see that being like a major growth driver for them heading into 2025.
Is it just tough being in the toy business these days, though, because there's so much, you see young kids pecking away at iPads. There's just so many attractions in the virtual world.
It has definitely become harder to kind of get that mind share, right? Especially with younger consumers and parents. But I think that's one reason why investors do like Spin Master specifically, is because they do have that digital component. What we are seeing right now is that, their digital offering for younger children is actually doing quite well. They are having some, again, I feel like I keep using the term noise, but moving more to a subscription-based model. But ultimately, they are using that digital side to attract a consumer base as well.
And longer term, do you think Spin Master, with the weakness in the stock, could it become takeover bait for the likes of Hasbro, for example, or Mattel?
Yeah, I mean, anything is possible, right? Especially in the toy space. There's always a lot of market chatter, especially at these valuation levels. What I will say is that based on the ownership style and stake in Spin Master, I don't think it's a likely target. They are, founder led, not necessarily from the CEO position, but from the board. So I think they would get a little bit of pushback there.
Right. I guess it is show business, though. Sorry, just to return to this. If you don't have a hot toy, investors may just lose interest or for the moment, but they like to read, well, Spin Master's got the toy of the year.
Exactly. And, for a long time, they've done a really good job with something like a Hatchimals or with Bakugan or things like that. But what we've really seen this year is a real big step up in competition. And so it'll be interesting to see how the next year plays out.
Thank you very much, Kylie.
Thank you.
Kylie Cohu, consumer equity research analyst at Jefferies, and it is who has a buy rating on the